$891 billion gone. A single speech erased it. But this isn't just about Jack Ma. It's about how modern states use finance to keep power. Watch till the end, and you'll see how it still controls your money today. October 24th, 2020. The Bund Finance Summit in Shanghai. Jack Ma stood before China's financial elite, smiling like a man who had conquered the future. His company, Ant Group, was just days away from launching the largest IPO in history, valued at $313 billion, expected to raise $34.5 billion. The deal would have made Ma the symbol of a new era, where private tech power could outgrow the state itself. But within 2 weeks, that dream collapsed. Regulators halted the IPO overnight. By 2024, the combined value lost by Ant Group, Alibaba, and related holdings would approach $891 billion. One speech had cost nearly $1 trillion. To the world, it looked like a crackdown. But beneath the surface lay something far more calculated: a reclamation of financial power. Because Jack Ma didn't just criticize outdated regulation. He exposed the invisible structure the Communist Party depends on to control credit, debt, and, ultimately, loyalty. When he called China's state banks pawn shops, he wasn't wrong, but he was reckless. In China's financial ecosystem, words can shift markets and threaten hierarchies. That night in Shanghai wasn't just a speech. It was a spark thrown into the machinery of a $17 trillion economy built on control. Jack Ma believed technology could democratize finance. The state saw it as destabilizing the monopoly on money. To understand how Jack Ma rose high enough to challenge a state, we have to return to the golden decade of China's tech revolution, the 2010s. Alibaba wasn't just an e-commerce empire. It was an economic operating system. From Taobao to Tmall to Alipay, Ma built a network that processed the daily transactions of over 1 billion users and 80 million merchants. By 2019, Alipay handled more than half of China's online payments, moving trillions of yuan every quarter. To the public, this was progress. To the state, it was power leaving their hands. China's government had long relied on its state banks, ICBC, Bank of China, Agricultural Bank, to channel credit toward political priorities. But Ant Group rewired that model. Its micro-lending arms, Huabei and Jibei, extended small loans to consumers and small businesses using algorithmic risk scores built from personal data, a function once controlled only by banks. By 2020, Ant had issued over $260 billion in consumer loans. To ordinary citizens, it was freedom. To regulators, it was a threat wrapped in innovation. Meanwhile, Jack Ma's charisma turned him into something no Chinese billionaire had been before: a cultural icon. He quoted kung fu philosophy, played rock concerts, and talked about reshaping capitalism itself. In a country where silence is safety, he spoke loudly and often. But by 2019, Beijing was growing uneasy. The Communist Party had tightened control over media, tech, and private influence. Xi Jinping's doctrine of common prosperity demanded obedience from the rich, not rebellion. The more Jack Ma's companies reached into finance and data, the more they resembled a parallel system, one that could lend, move, and measure money faster than the state itself. The tension was invisible, but building. Behind every smiling photo op with Ma, regulators were drafting new rules on fintech oversight. And behind every speech praising entrepreneurship, the party was quietly preparing a line he must never cross. He crossed it on October 24th, 2020, in Shanghai. That night would turn China's most celebrated entrepreneur into its most famous cautionary tale. The turning point came the moment he spoke. October 24th, 2020. The Bund Finance Summit, Shanghai. Jack Ma, dressed in a simple suit, stood before a room of regulators, bankers, and officials. Cameras flashed. The air was thick with expectation. Then he did the unthinkable. He told China's financial regulators they were operating with a pawn-shop mentality. He mocked their obsession with risk control, saying innovation had been stifled by outdated thinking. He implied that Ant Group, with its data-driven lending model, understood modern finance better than the central bank itself. In a single speech, he challenged the ideological foundation of China's monetary control. Within days, the reaction was swift and surgical. On November 3rd, 2020, just 2 days before Ant's record-breaking IPO was set to launch in Shanghai and Hong Kong, regulators pulled the plug. $34.5 billion vanished overnight from the world's largest planned public offering. Soon after, Ma disappeared from public view. Ant Group was ordered to restructure as a regulated financial holding company. Its credit operations, Huabei and Jibei, were separated from Alipay's payment platform. By April 2021, Alibaba itself was fined $2.8 billion for alleged monopolistic practices, the largest penalty in Chinese corporate history at the time. Investors watched nearly $891 billion in combined value evaporate from Ma's business empire by 2024, but the true loss wasn't measured in money, it was measured in control. The state had made an example of him. It was a message to every billionaire who mistook economic success for immunity. The party decides who thrives and who disappears. Officially, regulators framed it as financial risk management. But insiders whispered another truth, that Ant's vast data network, with its insights into the spending, debt, and behavior of hundreds of millions of citizens, was seen as a potential rival to the state's own surveillance and credit systems. The punishment wasn't just for a speech. It was a reset of power, a reminder that in China, information and money belong to the same master. On stage, Ma had spoken for 20 minutes. In response, Beijing rewrote the future of China's private sector. Beneath the crackdown was a pattern, one that has appeared throughout financial history whenever private money grows faster than state power. Jack Ma's downfall wasn't about a speech. It was about sovereignty. Ant Group had created a shadow banking system, trillions of yuan, in consumer loans, small business credit, and mobile payments, operating outside traditional state control. Instead of relying on government collateral or official banks, Ant used data as its currency, millions of behavioral profiles, spending habits, repayment histories. In a data-driven world, whoever controls credit data controls trust itself. Beijing could not allow that trust to sit in private hands. Regulators soon forced Ant to share its consumer credit information with the People's Bank of China, the PBOC, New Credit Bureau. Ant's black box, once its greatest advantage, became state property. Its business model was dismantled piece by piece, lending scaled back, data centralized, and the company converted into a regulated financial holding firm. This was not the first time a government had reclaimed financial control from private innovators. In 1933, the U.S. passed the Glass-Steagall Act to separate speculative banking from deposit banking after financiers nearly collapsed the system. In 1949, Mao Zedong nationalized China's private banks to bring all capital under communist control. And in 2008, after the global financial crisis, states worldwide reasserted dominance over too-big-to-fail institutions. Each time, the story looked like regulation. In truth, it was about re-centralizing power over credit, the lifeblood of any empire. Ant's rise had mirrored the logic of Western fintech, digital freedom, algorithmic trust, borderless innovation. But China's financial architecture runs on a different principle: control first, growth second. The party does not tolerate parallel systems of influence, especially those built on private data. The hidden mechanism wasn't censorship, it was absorption. The state didn't destroy Ant, it reprogrammed it. By 2023, state-owned investors had quietly increased stakes in Ant's key subsidiaries, transforming a private empire into a hybrid arm of the system it once disrupted. To the outside world, this looked like regulation. To historians, it looked like history repeating itself. The deeper truth? Every financial empire eventually learns that innovation isn't punished for what it builds, but for what it threatens. And in the end, the people who pay the price are never the billionaires. It's everyone else. When the state crushed Ant Group's wings, it didn't just silence a billionaire, it rewired China's financial bloodstream. Innovation slowed, investment confidence cracked. By 2024, foreign direct investment into China had fallen 29% year over year, hitting its lowest point in decades. Small businesses, once fueled by Ant's fast, data-driven loans, struggled to find credit. Youth unemployment quietly climbed above 20%, while consumer confidence, already weakened by the post-COVID slowdown, collapsed even further. Jack Ma reappeared in public years later, smiling, thinner, quieter. He had learned the lesson, so had every Chinese entrepreneur watching. The message was clear. In China, you may create wealth, but you never own power. In February 2025, Xi Jinping held a highly publicized meeting with leading tech founders, Ma among them. State media framed it as a sign of reconciliation, but the image told a deeper story. The king had been summoned back to court, not to rule, but to kneel. History has seen this pattern before. In Renaissance Italy, the Medici bankers were both indispensable and disposable to popes and princes. In 1930s America, the Morgan Empire fell to Roosevelt's reforms. Every time, Money tried to challenge the throne, and the throne reminded money who built the walls. The hidden truth of Jack Ma's story is not about one man losing $891 billion in paper value. It's about how modern states, east or west, use crises, regulation, and moral language to reclaim what truly matters: control over credit, capital, and confidence.